So we'll do a quick overview here of what we're going to be talking about. I'm going to start with just a brief overview of the buying process. We'll go through the steps, and it's going to be really quick, just to give you an idea of sort of what the roadmap is to buying a house. From there, Craig is going to go over pre-approval and what it means to actually be fully pre-approved and what goes into that process. We'll circle back to me for a really quick part on buyer's agency, and then we'll look at sort of where the market is now, and we will end with a couple of question and answers. If you have a question during the presentation, you can use the chat on the left and just type in a message, and we'll try to get to as many as we can. If it's something really specific to your situation, we might not answer it here, and what we'll do is we'll reach out to you afterwards, and we can set up a time to get you a better answer for any questions you have. So let's get started. We're looking at the buying process in general and what the roadmaps are and what you have to do to buy a house, right? So the first thing you kind of want to do, and it's really 1 and 1A are those first two boxes, you want to consult with a realtor and you want to also consult with a mortgage specialist to obtain a pre-approval. And those are really 1 and 1A, and a lot of times what's really helpful is if you connect those two parties. So basically the information going to one's going to both. It makes for a much easier process overall because the mortgage broker can tell the real estate agent that you're approved for this amount of dollars and this type of loan, and then the real estate agent can work with that and find you inventory that's going to work for you. So those are really the first two things that you want to do, and they create a good foundation for your house search. After that, we're going to have a pre-approval in hand, and that's sort of when the fun part starts, and your real estate agent's going to provide you with market analysis and inventory and all that good stuff, and you're going to go out and you're going to actually view properties. In a lot of ways, I think of this as sort of the dating period. So you're going on a bunch of dates with different homes. And finally, you fall in love with a home and you want to go steady. You're going to write an offer. And from there, that offer is going to either obviously be accepted, it's going to either be declined, or more likely than not, you're going to have some kind of negotiation. So if things go well and you're accepted, we'll move on. If you're outbid or it just doesn't work out, we circle back and we start viewing properties, and we'll stay in those three boxes right there until we get an accepted offer. From there, you're typically going to have 7 to 10 days to do your home inspection and to sign your purchase and sale agreement. Purchase and sale is your legally binding contract to purchase that house. Your home inspection, we're going to hopefully get a home inspector in here in a month or so to do another one of these webinars and really delve into the home inspection process. That's a really important part of it. We're not going to dig into the details here because we don't want to keep you for an hour, but that home inspection typically is done within 7 to 10 days after your accepted offer. So once you get the inspection and the purchase and sale done, you're going to officially apply for your mortgage. More than likely, you've already been talking to somebody like Craig, and he has all of your paperwork. And the purchase and sale is actually going to be the last thing that you submit to him to officially apply for that loan because he's already gotten all of your paperwork. From there, you're going to have about a 30-day window. From there, maybe sometimes even 2 weeks, depending on how long you have until closing. You're going to get your loan approved by removing any contingencies. So if there's anything that they need more information on or anything like that, those will get removed, and then your loan's going to be officially approved, and they're going to issue you a commitment letter. So one of the last real things that you have to do paperwork is arrange for homeowners insurance. So you're going to do that before closing. Typically, it happens about 2 weeks to a week out from closing. We're going to schedule a final walkthrough, so we're going to do that in the morning of your closing or maybe the day before. And what we're going to just go into the house, we're going to look around and make sure that everything is in the condition that we thought it was going to be when we put the offer in, and that the house is cleaned out. If there's any problems, we can typically address them before closing. From there, you're going to go and you're going to sign your closing documents. You're going to record title, and then after about an hour, when it's actually recorded with the Registry of Deeds, you are a homeowner. So this entire process typically will take between 45 and 60 days once you get an accepted offer. So we're going to move now into the pre-approval side of things, and Craig's going to talk to you about that. We'll welcome in Craig Barber from Fairway Independent Mortgage.
Great. Thanks, Justin. Like you mentioned, my name is Craig Barber. I'm a mortgage advisor over at Fairway Mortgage. And like Justin mentioned at the start of the presentation, if you guys cannot hear me, please go to the top mood button and hit the down button, and we will try to adjust the volume accordingly. So like I said, my name is Craig Barber. I'm a mortgage advisor over at Fairway. And first off, who are we? Who's Fairway Mortgage? Fairway Mortgage, we are a direct lender. Our only business is residential mortgage lending. We are similar to the bank where we provide the funds for your closing. However, we're not a depository. We only do residential mortgage lending. A big difference between someone like myself or someone that works at a lender compared to the bank is that we do need to be licensed and we do need continuing education. But again, Fairway Mortgage, all we do is residential mortgage lending. Here's a table from a recent article from the Market Watch and the Wall Street Journal. In looking at this table, this is purchase application denial rate in 2012. Again, these are buyers who had an offer accepted, went through P&S, had an appraisal done, and had their loan application ultimately denied in 2012. In looking at this chart, what jumps out at me is we would have to assume that these buyers were not properly pre-approved. A big takeaway everyone should have from this presentation, this webinar today, is understanding the difference for being properly pre-approved and just pre-qualified. Again, just looking at this table, it's pretty telling that a lot of these people probably just didn't have their paperwork sent in up front before they went out, made an offer, and had it accepted. Interest rates, mortgage rates, this is a question we get on a daily basis. Interest rates are historically low. Ultimately, your rate you will qualify for will depend on your situation. We take a look at your credit, the property type you are looking to buy, and the loan product you are applying for. Again, you guys, the borrower, will ultimately determine what rate you're going to end up getting. Here's a chart dating back from Freddie Mac from 1971. As you can see, interest rates are historically low. We are currently off the all-time lows that we saw last year when we were talking about the 30-year fixed traditional Fannie Mae Freddie Mac mortgage. Rates were as low as 3.25% to 3.5%, trading between 4 to 4.5%. But again, this chart does illustrate we are pretty near their all-time lows. Interest rates trade daily, just like the stock market. They open and close, and they are a type of a bond security. Here's a chart that kind of shows a snapshot of real-time trading. This chart is a tool that we have over at Fairway that will help time the locking or floating of your rate based on when you're closing and based on what's happening in the market. As you can see on this chart, as prices of these bonds go up, yields or rates ultimately come down. And the same as prices come down, yields or rates ultimately go up. As you can see here, we've kind of been on a little downward trend, and this dates back through fourth quarter 2013. Rates have really kind of steadied themselves. We are off their all-time lows, but they're still excellent right now. And this is just a tool that we use when you start your home search or have an offer accepted to help us time the locking or floating of your mortgage rate. So what exactly is a pre-approval? A pre-approval ultimately is an affordability and creditworthiness analysis. We are evaluating you, the borrower's ability and willingness to repay your loan. It's not an actual loan. It is, however, a lender or an originator approving you subject to the property type. The property is one piece of the process, so we do not know what you're buying. And if you guys are for condos, not only do you, the borrower, have to be approved for financing, so does the association. This is where working with a good buyer's agent, someone like Justin, he'll be able to advise you on what associations can and do not qualify for secondary market financing. It's also important because we establish a price range, solve potential problems up front, and it ultimately makes your offer stronger, especially in today's competitive marketplace. I really don't know of agents taking offers or accepting offers without an actual pre-approval letter. Again, so a pre-approval letter is a full credit approval subject to property type. How do I get pre-approved? Starts off saying it's easy, right? It's only as easy as if you guys, the borrowers, give into the document process. We require a lot of information up front. It's going to be your W-2s, your pay stubs, your tax returns, asset statements. We're going to collect all this up front again to solve any potential problems before you go and make your offer. It can be done in person or on the phone. It cannot be done online. If you guys are getting a pre-approval online, that's probably that's most likely a pre-qualification. And what that is just someone looking at your credit score, putting in what you tell them you make and how much down you're going to put, and issue you a price point of what you should start looking at. Again, the big difference between a pre-approval and a pre-qualification. Pre-approval, we are going to look at you, the borrower, your income, your assets, your expenses, do a full credit analysis, and again, take a look at the property you're ultimately going to buy. And this is where Justin will come in and help you as well. In looking at your income, we take a 2-year history of your job stability and how you're ultimately paid. If you're paid W-2, base income, base pay, that does make our job a little bit easier. And then when you're getting into commissions or bonus income, we do need a 2-year history of you receiving that income. Your assets. We are going to document and verify all of your assets prior to going out and make an offer. We need to know where your money is coming from, your down payment money is coming from. We need to source and deposits over $1,000 that are not payroll related, and we need to document this primarily with a gift letter. Gifts have been extremely popular in the past, especially with the price points in this area, and they can be used for qualifying assets if documented correctly. So if you're planning on getting a gift from a family member, you do want to let your originator or your mortgage advisor know up front. That way he could advise you on how to properly document the gift money. In looking at your expenses, what we're going to look at is what's listed on your credit report. It's your installment debt, student loans, car loans, your revolving debt, which is your credit card debt, and any other mortgage you may have. Oops, sorry guys. So looking at your expenses, we do not include your insurance, your utilities, or groceries. We do know you pay this on a monthly basis, but we're only going to look at what's listed on your credit report. Your credit score, when I talked briefly from the start, your credit score is ultimately going to dictate, will dictate what type of interest rate you'll ultimately qualify for. The higher the credit score you have, the better terms and conditions you're going to qualify for. We look at your credit score, your payment history, and number of trade lines. Ideally, we want to see 3 trade lines open and active for at least a 24-month period. Low down payment options. There are a few great low down payment options. Mass Housing is a mass bond program in the state. It is income restricted, meaning you need to fall within an area median income based on the county. Every county is different, so you definitely want to make sure you talk to your originator to see if you qualify for this program. This allows you to buy a home with as little as 3% down. Fannie Mae, another great low down option. It is income restricted as well. And then FHA still gets you into a home with as little as 3.5% down. How much money do I need to close? In working with borrowers, we want to make sure you're properly prepared day of closing. Not only do you need your down payment money, whether it's 3%, 5%, 10% down, but you also need money for closing costs and escrows. Closing costs is a rough estimate, run anywhere from about 1.5% of your purchase price, and this includes all lender, third-party fees, and also most attorney fees. And you're also most likely going to need an escrow account at closing. And what an escrow account is, it's typically 3 months of taxes and 3 months insurance that you put into account, and this account will pay these bills for you as they come due. You're going to continue to receive quarterly tax bills. You do not pay them yourself. The escrow account ultimately pays this for you, and same with your annual insurance bill. This is your money, and if you ever sell or refinance this mortgage, the funds in this account will get refunded to you 2 to 3 business weeks after you close out this mortgage. A concern we see a lot with borrowers is cash to close outside of their down payment. In working with a good buyer's agent, more times than not, they're able to structure your transaction where these costs, these closing costs and or escrow account can be financed or paid for by the seller. So you definitely want to make sure you have this conversation with your originator and realtor prior to your initial meeting. And that's pretty much it for me. Justin, I'm going to turn it back over to you to go over the buyer agency and the current market.
All right, thanks a lot, Craig. I had a couple of issues there with the presentation where I might have accidentally switched your slides. But we're going to talk really quick agents, and then we'll just get into sort of what's happening now. And a really big question I typically get is, why shouldn't I just use the listing broker that I meet at the open house? Why should I have my own representation? And really the answer is that when you sign a buyer's agency agreement with somebody, you now have entered into a contract where they are obligated to work in your best interest. So they have a fiduciary responsibility to work in your best interests. Without that written contract, they don't contractually have that obligation. And by the letter of the law, they're technically working for the seller. It's a really good idea to sort of get that in writing, that you have somebody that's representing you and your interests. They are obligated at that point to uncover and disclose any information about the property. They are not obligated to do that without a contract. So, an example of this would be to look into the property's history, see when it was bought, what it was sold for, any red flags that at all can be found. With this agreement, your agent is now obligated to disclose that to you. Without it, they are not. That just kind of ties into number 3, and it's that a buyer's agent is going to be an unbiased resource. And this one bullet point, I think, really sums up what a good agent is. And a good buyer's agent is going to tell you when to not buy a home. So when you're looking at homes, it's a really emotional experience, and you walk in and you might fall in aspects of a home, and it becomes a really emotional thing, and you really want the house, and you might overlook some really glaring deficiencies. You might fall in love with some of the finishes, but maybe the structure, it has problems, or the systems have problems. And what a good buyer's agent is going to be doing is they're going to be the unemotional one next to you, and they're going to tell you maybe when it's not a great situation, or maybe the price is just too high. And this sort of ties in again to the obvious one, is that I'm going to give market analysis. So we're going to pull up-to-date market analysis. We're going to build the best offer for you, and we're going to sometimes maybe tell you that the price is a little too high for the neighborhood. The best part of the whole thing is number 2, and that it's no cost to a buyer. Buyer's agents are 99% of the time paid for from a seller's listing commission. There is a rare opportunity sometimes where you will have a for sale by owner that won't offer a buyer's agent commission. And in that situation, you can work something out with your buyer's agent. But 99% of the time, it is no cost to you. So now we'll look at the market now and what's happening now. So 2013 was a year of the increasing buyer confidence in the housing market. And really early in 2013, rates were low, and the prices started to go up, and we just saw this huge influx of buyers, all of the inventory. So we went from a high inventory market, which is a buyer's market, to now we're in a low inventory market, which is a seller's market. With this low inventory comes increased property exposure. And what do I mean by this? When somebody has an open house or somebody puts a new listing on, you're going to have more people looking at that because there's less total houses to look at. With the increased exposure, you're going to have less negotiating power because there's going to be more offers typically than just you. And with multiple offers comes an increase in prices. Then we look at the active listings in Boston. So we pulled this number for 2014. We pulled it a day ago. And we had 532 active listings in Boston for single family and condo. Last year at this time, we had 515, so just about the same. But if you go to 2012, there was almost 1,200 on January 13th last year. In 2012. And then there were 1,500 in 2011. So the inventory this year is 36% of what the inventory was in 2011. And it's not just in Boston. We could stretch this out further because it's more of a regional thing. But if we look at Cambridge and Somerville, you see in 2012, we had 91 and 85. In 2013, we still had 88 in Cambridge because the prices in Cambridge were pretty high to begin with, but 35 in Somerville. So Somerville shrank to 35. And then if you look at 2014, we have 27 and 26 respectively. And what does this all mean? So 2012 in Boston and Cambridge, the average listing stayed on the market 79 days with an average sale price of $568,000. Average list to sale price was 7%. So at a list price, of $100,000, that means they're going to get $97,000 back for every $100,000. In 2013, the days on market decreased 33 days, and average sale price increased $55,000. List to sale price in 2013 was 98.9. So that's a great illustration of sort of what happens in these low inventory markets. And to tie it all up, what does this all mean? What does this webinar mean? So in a low inventory market that's highly competitive, where you have multiple offers, it's more important to sort of have an experienced buyer's guide, because times you're going to get into multiple offer situations. And you're either going to maybe bid a little too high, so you need somebody there to maybe throttle you back sometimes, or you need somebody that's going to tell you what you need to do to put the best offer in and have the best opportunity to win that multiple offer situation. And it's also paramount to be pre-approved before you look at homes. And this has been one of the biggest changes in the last couple of years. You used to be able to maybe take people out on a weekend, and then Monday or Tuesday they'd get their pre-approval all done, and then maybe Wednesday or Thursday you could think about putting an offer in. But with the current situation, majority of listings that come on that are aggressively priced, or at least in the ballpark of where they should be, are going to have offer deadlines Monday afternoon. So if we go on a Sunday and we see something and you fall in love with it, we very well might not have time to get you fully pre-approved before the offer deadline. So it's really important to have that pre-approval in hand before you go out. So that's going to be it sort of for the content portion of it. We've had a couple of questions come in, and we'll go over a couple of them. And then if you have any other questions at all, obviously we're here to help. But I got a couple here, and the first one I will shoot over to Craig. And it says, my lease ends in August. When do you think I should start the pre-approval process?
Yes, thanks, Justin. Great question. We see this all the time. Quite frankly, starting sooner rather than later is never a bad thing. Again, it gives us plenty of time to go through your credit, go through your situation, and take care of any errors that should not be on there. In working with the credit bureaus, it can be a challenge, so we do want to make sure we put you in a position where you qualify for the best terms and conditions. And Justin, I know you're going to chime in here as well, but typically it's going to take, you're not going to find your house on the first showing. It's probably going to take 30, 60 days to find the right house, and on the mortgage side of it, it's going to be a minimum 30 days, but typically 45 to 60 days to get your home or your home loan fully approved and ready for closing.
Yeah, and so I'll just hop in sort of on the realtor side of things. Typically, I love talking to people when they're a year out, right? I like having an opportunity to bounce ideas back and forth, get an idea of what style you're looking for, number of bedrooms, maybe if you're open to 2 bedrooms in an office, or do you need 3? So there's a lot that goes into what your dream home is going to be. And I think the faster you get a real estate agent that you trust and you're bouncing ideas off of, whether it's me or somebody else, the longer you have that relationship, the better you are, because it's going to be a less stressful process once you actually start looking at houses. We actually have another question for Craig here. If you pull a credit score, is it going to lower that score? So if you have to get your credit pulled for a pre-approval, is that going to lower someone's score?
Yeah, another good question. We get this all the time. In pulling your credit, yes, we do what's called a hard inquiry. It will have an impact of your score. Typically, it's 3 to 5 points. And assuming all things being equal, meaning you continue to pay time, you don't incur any new debt or again, aren't late on any current debt, you're going to get those points back within a 60 to 90-day period. Credit reports are good for 90 days, so we don't need to pull your credit every time we seek. Like I said, it is good for 90 days. And then the second part of that question I see here is how long is a pre-approval good for? A pre-approval is actually good for 60 days, and the reason for we have an expiration date on our pre-approvals is that we don't want you out there making offers if something of your credit profile has changed, whether you've taken a new job, lost your current job, or have to put less money down. So we do have an expiration date on our pre-approvals.
All right, perfect. We have another one which I will chime in on here, which is where is the best place to find foreclosures, which is one of the more popular questions I get on a daily basis. And truthfully, there is not a lot of foreclosures in the Boston area. Prices never really dipped low enough to put people in a position where they couldn't sell their homes and still pay off their mortgage. We still had a dip in some neighborhoods, but in a lot of the greater Boston area, prices never really dipped far enough to really impact those folks where they couldn't get rid of it. So there's not a ton of foreclosures in Boston. There's still a lot of great value. I think you just need to know where to look, and that's where a good buyer's agent will come in for you. All right, we got another one here for Craig, which is, what do you think is going to happen to rates in 2014? Do you think they're going to go up or down?
Yeah, good question. We all are safely assuming and expecting rates to gradually increase throughout this year. I think gone are the days where we see those all-time low rates, or this 3.5% 30-year fixed rate mortgages. Ever since second quarter last year, when the Fed started mentioning talk of what's called the tapering of the quantitative easing, the market priced in this rate increase. Well, the tapering officially occurred back in December, and quite frankly, there was an initial knee-jerk reaction, but rates have been pretty steady, and we're currently seeing rates trade, like I mentioned before, mid to high fours, depending on your situation. I think it's safe to assume by the end of this year we'll either be in this range or slightly higher. I really don't think rates will come down, but depending on the U.S. economy and world economy will ultimately dictate which way rates go.
All right, perfect. So we got about 2 more minutes left in sort of the block that we were going to do. So I'm going to snag one more of the questions from the chat. If we do not get to you, we still have all of them. And what we'll do is we'll reach out to you after, and we can kind of start that conversation, because I do see about 5 or 6 other ones. But we have one that says, agents often specialize in 1 or 2 neighborhoods. If you're open to several different neighborhoods, should I look for multiple agents? So typically, for me, the only time I would really be working with multiple agents is if they're vastly different areas, right? So if you're looking in the greater Boston area, you can have an agent for that, and then maybe you have another search going in the Western Mass area. Most times nowadays with technology the way it is, and it's pretty easy to pull numbers, and it's pretty easy to get a really great feel for a neighborhood, it's not really necessary to kind of neighborhood by neighborhood, and most real estate agents in Boston and outside of Boston will cover most of the greater Boston area and can still do so pretty competently. So I don't necessarily think if you're looking in 1 or 2 neighborhoods you need to have 1 or 2 agents. It's really specific to where exactly you're looking. But that's it for now. Again, we didn't want to hold anybody over 30 minutes. If we do have a question that we didn't get to, like I said, we will make it a point to reach out to you today, and we'll answer that question one-on-one. We will be doing a drawing with everybody who attended for the prizes that we had mentioned, with the free home inspection certificate and the free appraisal certificates. We will do that, and that will be sent out via email. If you guys can answer the quick little survey, it's 2 questions that I believe you'll be automatically taken to when we end this. That would be appreciated. We're going to try to put together more of these. This one was sort of the first one, so I know we had a couple technical issues that people were talking about. Hopefully we can kind of iron these all out and get it going for the next one. And thanks again, everybody, for coming, and we appreciate your time.